Good afternoon, everyone. Welcome to Stock Market Today. My name is Ken Shreve, joined today by Justin Nielsen. Really a rotten day for the stock market today. We got hotter than expected consumer prices before the open. Stocks just could not get out of their own way and ended near session lows. We'll give some color on today's market action, but before we do that, Justin's going to give his three stocks to watch for today.
Well, when a day is as rotten as it is, like you said, Ken, one of the first things we do is look for those stocks that were showing relative strength. So a few that popped up on my radar today, Corteva, which you mentioned on IBD Live today, Cheniere Energy, which is a leaderboard stock, and Albemarle, which is one that we've been talking about in the lithium area that has been strong and continues to be so.
All right, three good-looking stocks there. We'll touch on those in just a bit, but let's start by taking a look at the major stock indexes. Nasdaq Composite. Look at this, down 5.2%, and you can see all of a sudden this September 6th low from last week looks to be in play here, Justin.
Yeah, this is one of the things where we were looking at this rally, and we keep on saying one of the problems that we had with it is, sure, over the summer you expect that low volume, and especially right before Labor Day, but the volume signature on this was a little bit disconcerting. The fact that you had heavier volume on the downside and much lighter volume on this rally was something that was bothering a lot of us. Now, that doesn't mean that necessarily, it has to go down, but that was kind of a warning sign. And look, all the expectations were for that CPI report to be down 0.1% for the month, and it flipped it the other way, and it was up 0.1%. So a big kind of shock to the system there, and all of the gains basically of the last 4 days were wiped away. So I think that September 6th area that you're mentioning, that low is going to be important for us. Can we hold above that? And it just so happens that that corresponds to the July 26th low. If you just kind of go back a little bit, and that was kind of our line in the sand for whether or not we were going to put this market back into correction. It certainly came off very hard once it hit the 200-day moving average line on the S&P 500 and got close on the NASDAQ composite. But that's kind of our lines in the sands. And you just have to be careful here because we could be seeing a lot more of this back and forth action. And the choppy markets, those are the toughest. That's where you can get the most hurt.
Most definitely. Well, we did get higher volume on the NASDAQ, so we are going to get a distribution day added to the count, and it looks like volume is going to be higher on the New York Stock Exchange as well. Here's a look at the S&P 500. It ended with a loss of 4.3%. Energy stocks were holding up. Oil and gas stocks were holding up, but they eventually got taken down here. But pretty bad day for the S&P 500, Justin, after 4 straight gains like we were talking about in light volume. We get a higher volume decline today.
Yeah, and that's exactly the opposite of what you want to see, especially when it's so severe and it takes out multiple days of progress in a single day. And this was to a degree. I mean, if you look at the devastation that happened, right around the Jackson Hole time, that move on the 26th was pretty severe, and it took us a long time to kind of recover from that. And now here we are, once the recovery just started getting into that area from the August 26th day, now we're right back down to near-term lows. So again, this is still a very tricky market. It's still a time where I think you want to have exposure being very light if you are market timing, or certainly it's not the time to be in those big innovators, the big, speculative names. This is more hiding rather than hunting.
Yeah, definitely. And the Dow Jones Industrial Average down 3.9%. You can actually see it. Actually, the blue chip index actually undercut that September 6th low by just a little bit today. Interesting to see Apple. Apple was one of the worst decliners in the Dow today. We had a bullish move above the 200-day moving average for Apple, as analysts were sounding pretty optimistic about iPhone 14 demand, but after rising above the 200-day moving average, you can see Apple just got really taken apart today, plunged nearly 6%, it looks like, and look at the volume on the downside here. So, all right, finally, let's just take a look at the Russell 2000 here. We'll take a look at IWM, which is the iShares Russell 2000 ETF, plunged below the 50-day moving average, just like the major stock indexes here. The IWM down about 3.9%. All right. So what did bond yields do today on this inflation data? We'll take a look at the 0TNX in MarketSmith. And by the way, folks, MarketSmith is free all this week through Sunday. You can go to investors.com right at the top of the homepage and sign up. But had a big move in bond yields today, Justin.
Yeah, almost getting right up to those June highs, and it's certainly the expectations. We've got a Fed meeting coming up on September 21st, and the expectations for a 75 basis rate hike, they're pretty much almost guaranteed right now. The big question is, will we get a full point of a hike from the Fed? That's looking more and more likely, and the numbers on the Fed funds futures really changed to a large degree on that. I mean, I was seeing numbers that were, almost close to 50-50, but right around the 40% range at the close for a full point hike on September 21st.
100 basis points next week on Wednesday is not out of the question. At this point, I think the odds got up to almost 50% today of 100 basis points. I think they trailed off by the close. And then the prospects for another 75 basis points in November, now that is on the table. So this inflation data today was exactly what the bulls did not want to see, because it means that the Fed, well, first of all, it means that inflation could be stubbornly high and sticky for a period of time. Hopefully that won't be the case, but it does mean that the Fed is going to have to raise rates aggressively to bring this inflation down. All right, well, let's start by talking about some individual stocks here. And the first name, what did you want to talk about first, Justin? I know you had
Corteva. Let's take a look at that. The
Corteva.
symbol on that is CTVA.
CTVA, agriculture stock here.
Yes, and the agriculture area, agricultural operations, the chemicals agricultural, this is one of the areas that just was holding up much better than most of the market. And you look at the chart on Corteva, and keep in mind what we just saw when we were looking at the index charts. It's almost like nothing happened here. This is just like your nice cup with handle getting formed here. A depth of only 22%. We've been seeing a lot of deeper bases, close to the 40% range. So that depth is very, very mild, and the handle is still intact. And today, this is one that did get hit early on, but there were a number of these stocks that just quickly fought their way back, and Corteva was one of them. Just almost right after the open, this was surging, even though it was down in the pre-market considerably. Ended up for the day, a big outside day, closing in the upper part of its range, and most importantly, when you see the destruction that we saw today, you want to take a look at what is holding up relative strength wise. And we have that relative strength line. And one of the features of MarketSmith, we have this blue dot. And that blue dot tells you when a relative strength line is making a new high while a stock is basing. And we have our pattern recognition algorithms to kind of identify when patterns are forming. And so when you get that relative strength line at new highs while the stock is still basing, that's something that we really like to pay attention to. And we got that blue dot right here on Corteva.
Yeah, here's a look at a weekly chart, just a classic example of what a cup with handle base looks like. So if this market can somehow hold itself together, we think that Corteva could be a nice outperformer here in a good setup here, and a stock that did buck the trend today. All right, next up we'll look at ALB, Albemarle, and we'll start with the daily chart first. And my system's a little bit sluggish today, but here's Albemarle, and let's go to the daily chart and see another stock that that outperformed today.
Yeah, so for Albemarle, it was a similar situation. This is one that was down in the pre-market, opened up down, but quickly fought its way back to positive territory. And, you don't see the blue dot on this one because this stock is actually already out of a base. It broke out, and it's been holding up above its 10-week moving average line, and it's relative strength line is definitely in new high ground. So that's worth noting. Another outside day. So the area that I'm watching here for Albemarle is 300. That's an area that kind of looks like it could, provide some resistance here. It certainly did a couple days ago. It did again today. So I'd like to see it, cross that level. But this is one that, we've been talking about after it touched that 10-week moving average line just barely. You don't really see it on the daily because it didn't come down to the 50-day, but it did touch its 10-week line and reverse from there. We've been looking a lot more at these pullbacks, these early entries, these reversals, and Albemarle is one that's continuing to hold up right now.
Okay, very good. Well, I printed out the notes from today's show, but I missed I missed the third stock. So the third stock again, Justin.
One you're familiar with, Cheniere Energy, which has
Of
been on
course,
leaderboard
yes,
for quite a
of
while,
course.
and eh,
LNG had very good news late Monday, and another strong performer here.
yeah. So actually, there was some good news with some of these. Corteva, I think they gave some guidance today, and we're announcing a buyback program. LNG, Cheniere, that raised its fiscal year guidance for 2022, so a strong move there. And look, even if you look at the oil and gas, XLE, even though it was down, it wasn't down as much as the indexes. And UNG, which we were talking about yesterday, UNG is the natural gas ETF, was actually closing well, today as well. It closed positive. So LNG had the extra benefit of having a raised fiscal guidance and some really good stuff that was saying about what's happening there. So LNG is another one of those stocks that is just again, you look at it and it's like what pullback, what destruction in the market, because this just held up so well. You did have that reversal last week, and here, we just like to see that kind of get that reversal behind it, that downside reversal, and show the strength that it has been. But a lot of volume behind the move today, more volume than it looks like on that downside reversal we got last week. So that's a positive sign, and very different from what we're seeing in a lot of other places in the indexes.
All right, three outstanding stocks today. So, Justin, final question. I mean, people that are still holding individual stocks, what is the best course of action right now? Do you just get out of the market's way and sell everything? Do you say I'm a long-term investor and I'm just going to hold on to my stocks? What's the game plan from here?
Well, the first thing there is that you always want to make sure you have your exit strategy and your exit plan done before you get into a situation like today. The situation that we had today, that's not where you want to be deciding, oh, where am I going to get out? How much am I willing to lose here? You want to have those plans set ahead of time. And so for a lot of what we were doing on Leaderboard today, Swing Trader, and in our own portfolios, was taking a look at each stock one by one and saying, okay, is this, based on where I bought it and based on how much cushion I have or how much cushion I don't have, what am I going to do here? Where are my lines in the sand? And you don't have to be doing all or nothing. You can do incremental sells. We did that for SSO today. We took some off on Leaderboard early in the session, and then as the destruction continued, we took the remainder off. So don't feel like you have to do all or nothing bets here. But today was definitely, I think, a shot across the bow that, hey, we might not be ready to rally yet. And you also have to recognize that September does tend to be weak. This is something that we've been talking about on IBD Live seasonally, that the weakness in September, a lot of bottoms happen in October. So that plus this Fed, hiking overhang, you have to be very careful. And that's why we've been recommending lower exposure until the market shows us more oomph. And that's a big reason why we didn't move to rally back into confirmed uptrend yesterday, because we didn't have the volume behind it. And that was one of the reasons why we've been cautious with exposure in the first place. So
Got
hopefully
it.
you're not getting as hurt as the indexes were today. And you just have to take a look and see what happens over the next few days, and maybe do a little bit of selling each day as your stops are getting hit on your individual stocks.
Well, I just wanted to highlight Invesco Solar. This is the solar
Yeah.
ETF, and solar stocks held up relatively well today. Enphase, First Solar, but we're still holding this in the leaderboard portfolio. You can see how the stock closed off its lows and found support at these kind of converged 10-day and 21-day moving averages. So you really just want to look at individual stocks and how are they holding above short-term support levels. Recognize unequivocal sell signals when you get them. But we were encouraged by Invesco Solar's price action today. Did a little trimming on leaderboard, but still holding several stocks that are holding support. And the bottom line is the market is not telling us to get rid of them yet. And Invesco Solar's a good example. All right, well, that's going to do it for today. Sort of a really a tough day for the stock market after the consumer price index came in much hotter than expected. We've got wholesale inflation data due, I believe, on Thursday this week, the producer price index. So we'll see what that looks like, and just be careful out there, folks. Keep your losses small, protect capital. That'll do it for today. Allie will be back tomorrow. I'll be joining her for tomorrow's video. So we'll see you back here tomorrow. And one last just a heads up that I mentioned earlier. MarketSmith is free access this week through Sunday. You can go right on the homepage of investors.com. Right along the top of the homepage, you'll see in orange the MarketSmith free access week. So feel free to sign up and test run this just really, really top-notch charting service. So that'll do it for today. We'll see you back here tomorrow. Thanks a lot, folks.